Welcome to the Master Passive Income Podcast, where we talk about investing in real estate rental properties with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
All right, it's time for the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you learn how to quit that J-O-B, that just over broke job, by investing in real estate rental properties so you never, ever have to work a job again. Now, there's so many great things about real estate. Obviously, passive income is my favorite, and obviously, because I don't have to work a job. I make money because my properties work for me. I pay property managers, realtors, contractors, everybody else to do all the work. And you guys will always hear me tell you about the 6 different ways that you make money investing in real estate. And one of them is your tax benefits. I kid you not, I love real estate so much for many different reasons. And tax benefits is just another huge, amazing, huge blessing on top of everything else about real estate. And what I want to talk to you guys about today is taxes, because right now, this is towards the end of the year. This is December, and we're going to be going through taxes sometime soon. But I want to walk you through all the different tax benefits, tax breaks, and all that sort of stuff that you can actually get when you buy just one rental property. I kid you not, you get one rental property. The IRS sees it as a business, and then you have so many expenses to write off. And as we're thinking about our business, what we're going to be doing is building it bigger and bigger and utilizing this as a way to generate wealth, as well as generate generational, but to make generational wealth for us and our families. And in this episode, I'm going to be going through so many great things, but here's the biggest thing that you must take away from this. I'm not an accountant. I'm absolutely not an accountant. I hate accounting. I actually failed. I went to Fresno State in California, and there was accounting 4A and accounting 4B. I literally failed accounting 4A, and big reason why is I was so bored out of my mind, and I didn't do any of the work. So obviously, you're not going to do very well in your classes. So I failed 4A, and then I had to take it over again, passed that, and then got 4B, had to pass that because I was a business entrepreneurship major. And as I was finishing that, I was like, there's no way I'm ever going to do any accounting for myself. I'm absolutely going to make enough money to pay somebody else to do this. And so everything that I'm relaying to you is what I've heard from my accountants and what they've told me and what they're doing for me. So I'm just relaying this on to you. So make sure you talk to your accountant, because no matter what, everything that I say doesn't really matter as long as the IRS is okay with it. So go with your accountant, because they know the IRS, the rules and regulations and all that sort of stuff, and the tax code. So follow what they say. Now, I definitely want you to buy your first property. Everything that I do at Master Passive Income is to get you to realize that you absolutely can do it. Now, what's interesting is I can teach anybody, literally anybody, how to invest in real estate. And I have hundreds and hundreds of people, hundreds and hundreds of students actually have learned how to invest in real estate. I can do that. But what I can't do is to get you over that hurdle, that fear, that worry, or that analysis paralysis where you're not going to buy that first property. So everything I do at Master Passive Income, the podcast, my YouTube channel, everything that I have is just to get you to understand that you can do it. Now, I do want to give you my real estate investing course absolutely for free. If you text the word rental, RENTAL, to 33777, or if you go to masterpassiveincome.com/free course, it'll be in the description. Definitely go there. I will literally give you my real estate investing course absolutely for free to get you started, to get you to buy that first property. I kid you not, I get so many people emailing me saying, hey, Dustin, I just listened to your podcast and I bought my first property and I'm investing in real estate. I'm like, yes, that's exactly what you want. Now, I will say there's so much more to learn. In fact, everything that I give away for free is literally like 10 to 20% of everything you need to know. Everything else I have in my Real Estate Wealth Builders. But to get you started, to get you to realize that you absolutely can do this, I'm going to give you my real estate investing course. Get it for free. Now, let's jump into what we're going to be talking about: taxes. How, as a real estate investor, you could actually pay so much less in taxes. Now, we're not breaking the law. Like, we're not skipping out on taxes and just not paying our taxes. No, we're actually utilizing the laws that are currently written for us as real estate investors. It's almost like they wrote them just for us. Well, in fact, I believe the people that wrote the laws were real estate investors, so they wrote them to benefit us. Now, take a quick thought of how much you pay in taxes right now. I don't think anybody likes paying taxes. In fact, there are two things that are certain in life: death and taxes. It's actually going to happen. But if you think about how much you actually pay in taxes, well, your normal paycheck has a couple different taxes. Let's just go with a couple of the bigger ones: the federal income tax and the state income tax. You have federal is probably going to be about 30%, 25 to 35% income tax, depending on your tax bracket. You can get up to like 40 and 45%. You also have state income tax, which is probably going to be another 7, 8, 9, 10% on top of that. So let's just say 35% in federal taxes. Then you have state taxes. Let's just lower that one down a little bit and say 5%. Well, 35 plus 5% is 40% in taxes. Well, what about sales tax? Whenever you buy anything, you're penalized for buying things from the government. You get taxed on that as well. Well, let's say in my area, it's like 9% in tax. Well, add another 9%. So that's 49% in tax. Well, what about property taxes? That's going to be another at least like 2 or 3%. Let's add that. Let's say it's 42% in taxes. Now, on top of that, think of other taxes you got to pay for. What about if you go fishing? You got to buy a license. That's a tax. If you have a dog, you got to pay a tax on that. If you have a car, you pay a tax on that. There's so many different taxes out there, but let me show you exactly how you can utilize your real estate investing to benefit you to pay even less in taxes. There are so many great ways and reasons why. The first amazing tax benefit you have is all of the business expenses. You can deduct all of the business expenses that you have for your properties. Now get this, if you buy just one property, you now can write off a lot of things in expenses. Now, I will say, big caveat, I'm not an accountant. I'm just kind of relaying what I've learned from my accountants, but I give them all my numbers and they make sure I'm complying with the law. So talk to your accountant on all this. But when you do have one property, that property is seen as a business. As you go about running your business, like if you're driving from property to property, you're spending gas, wear and tear on your car. That's a write-off, like how much you spend on that. Now, I don't know the exact numbers, but talk to your accountant and give them all the numbers, and they'll be able to deduct how much in taxes that you can pay. If you have a cell phone, because you're calling up on sellers or realtors or property managers, a portion of that can be written off. If you work out of your home can actually, that portion of the house, I don't know how they do it, but they do it, where a portion of your house, what if you have a mortgage or you're paying rent, that is also a tax write-off. So whatever you make in money from your business, you lower the amount that you have to pay in taxes because of these business expenses. And as you grow your business, if you even travel, like I love investing all over the country, not just in one state, in fact, many different states. All of my students, we invest all over the country. And if I'm flying to an area to look at properties, to interview property managers, to check on my properties. Now, let's say it costs $1,000 to fly to, let's say, Florida, if I want to invest in Florida, and I'm driving around looking at properties, talking to realtors, using my phone, getting hotels and paying for food. That's a business trip to find properties and build the business. Remember, we always build the business first. That's $1,000. So if we made $100,000 in our business, $1,000 will be knocked off. So it'll look like we only made $99,000 instead of $1,000. So we tax on $99,000. That's just one little bit of amazing things about taxes that lower and lower and lower and lower all your taxes. So your business expenses can be written off. There's a laundry list of things. Think about anything that you do in your business, even getting your car's oil changed. That can be written off if you're using that for your business. Another great thing, here's a pro tip I'll give you. If you are utilizing your children to, let's say, lick envelopes and stuff them and mail them out, you can pay them a wage. That wage is going to them. They're going to make money. You are actually going to have lower in taxes because you're having an expense like an employee. And again, talk to your accountant on how to actually do that. But all these business expenses, this is what you will absolutely be able to do. If you're going to buy a new computer or a monitor or anything that helps your business, you're going to be able to have a tax write-off. Now, the second way that you have amazing tax benefits is depreciation. Depreciation is phenomenal. I love depreciation. In fact, The more properties that I buy, the more depreciation I have, and it looks like I make less in money. Now, here is the broad overview of what depreciation is. Basically, if you buy a house for $100,000, well, that $100,000 can be written off over 27.5 years. I don't know where they got that number, 27.5 years. They allow us, the IRS allows us to write off, basically deduct a portion of that $100,000 every single year for 27.5 years until it's basically worth zero. But we know, we're investors, we invest in rental properties that buy and hold long term. Now, with that one property that you had that you bought for $100,000, well, that $100,000 will be deducted over 27 and a half years. Out of all the profit that you make from all your properties and all your business, you're able to deduct every bit of that over the 27.5 years. So every year, a little bit's taken off. Now, if you have 10 properties, that's all 10 properties having depreciation, showing that you're making less in money when you're actually making more and you're appreciating. Imagine if you had 20 or 30 properties. It really, you might think, man, I'm not paying nearly as much in taxes as I thought I would. It's because of depreciation. Now, there is one caveat with depreciation. When you actually go and sell it, there's a little bit of things that the IRS are going to have to do, probably try to recoup that. I'm not sure exactly how that works out. Talk to your accountant, but that's something you got to watch out for. But over the time, as you're building your business, you have more money in your account so that you can actually buy more properties. And the third thing is to actually like this video because it helps the YouTube algorithm, as well as subscribe because I'm giving out so much great things on how to invest in real estate, how to make money, how to be wealthy. So like and subscribe this video. Now, the fourth thing is a 1031 exchange. This is brilliant. It's basically deferring, basically putting off, paying taxes almost indefinitely. This is really how a 1031 exchange works out. If you buy a house and then after 10 years, like Monopoly, you sell it and you move up to 2 houses or 3 houses, you basically keep trading up properties. You buy a house for $100,000. Then you sell it for $150,000 and you buy a $200,000 house. Well, what's great is normally you would have to, from that $150,000, if you did not do a 1031 exchange, you would actually have to pay taxes on that gain that you made, that $50,000 extra. Maybe you bought it for $100, you sold it for $150. That extra $50,000 you'd have to pay taxes on. But instead of doing that, you put all that money, you don't touch it, you can't touch it. That's the way 1031 exchange works. I actually have a video, check in the description for that video on everything about 1031 exchange, explaining everything out. But you basically take that $50,000 and the beginning money that you paid, the $150,000, and you put it into a new property. You don't pay taxes. You utilize that profit that you gain from that one property, put it into that second property. Now, get this, you can do this again. And you can do this again, and you can do it over and over and over and over and over again until you get $1 million properties, basically big apartment complex, and keep rolling that tax that you would normally have paid back then, rolling that into the next property. Now, eventually, once you completely cash out, once you completely sell, then it's all going to catch up to you. It's not going to be like every single property that you sold, you have to pay tax, pay tax, pay tax. No, it's just on this last property. So it's rolled over. The 1031 exchange is awesome, but there are a little bit of nuances that you have to learn. So again, watch that video, check the description for the 1031 exchange video as well. Now, the fifth thing is when you buy a house, you're going to have property taxes. Well, every bit of those property taxes that you pay to the government is a write-off. It's a write-off basically because let's say you made $10,000 on one property in 1 year. I know it's a lot, but let's just round it for round numbers. You made $10,000, but you paid $2,000 in taxes. Well, instead of making $10,000, you're only making $8,000, so you're taxed on $8,000. So you're having a lower amount of money that the government's going to say, hey, let me take that money from this guy. So the property taxes, whatever you spend out of your pocket, just like a business expense, is also accounted for. Now, the sixth thing is also your mortgage. If you have a mortgage on a property, it's going to be an expense that's deducted from your income. Now, let's say you had a property that made you $1,000 a month, but your mortgage payment's $400. Well, it only shows $600 in profit because that $400 is paid out. And on top of that expense, there's another great thing. It's the mortgage interest deduction. So basically, every penny that you put into and all the interest that you paid, that's also a deduction. And with that mortgage interest deduction, what you're going to be able to do is even lower the amount of money that you're showing the IRS or the government that you've made. So you have less in income, even though it's helping to pay off the property. And the seventh thing is that you are no longer taxed as an employee, as well as you're not going to be having the self-employment tax. Now, if you start a regular business, that's not an investment business, like a rental property business like we have, you start a brick and mortar business, like let's just say a convenience store, and you work in it yourself. Well, you are self-employed. You're still employed, you're self-employed. The government charges you a tax just to be self-employed. It's so horrible that you just get taxed left and right. So with the self-employment tax, it's gone when you are an actual investor. Your new classification, instead of being employed or self-employed, you're a real estate investor. Now, there is also a caveat that you actually have to be an investor, meaning you have to actually spend, I think, like 50% of your time doing investing or something like that. Talk to your accountant. They'll be able to make sure you get that done right. But you will save a ton of money not having a self-employment tax. So all these taxes rounded up, you're going to be saving thousands and thousands of dollars because what you have is a property, just one property that legally, I'm not saying it's illegal. It's absolutely legal because all of these things are in the tax code right now to benefit you. So once you buy that first property, talk to your accountant, make sure you're accounting for all your expenses, making sure that you're doing the 1031 exchange, you're accounting for all your property taxes, you're not paying self-employment tax. Once you have enough properties to show that you're an actual investor, you are going to save so much money. When I had a regular business that I was paying self-employment tax, it was a lot of money. I can't remember exactly how much it was, maybe like $500 a year, but it's a lot of money that you're going to be paying out in self-employment tax. Imagine that not getting paid out. And the eighth thing is super awesome, is you do not have to pay Social Security. You don't have to pay Social Security because you're not an employee. Now, there are caveats where you might have to and you might not have to talk to your accountant, but as an investor, you're classified as an investor. You're not paying into Social Security anymore. You can opt out. That's something that's super amazing that you absolutely need to check and do with your accountant. And again, you guys, I am not an accountant, so do not take anything that I say as like, tax law or anything like that. Just literally talk to your own accountant. I'm getting you down the trail so that you can invest in real estate. Don't forget my free real estate investing course. Get it absolutely for free. Text the word rental to 33777, RENTAL to 33777. Get that absolutely for free. Get started. You absolutely can do this. Change your life. Don't let another year of your life go by without making that change. Because trust me, once you do, your life will be amazing. All right, guys. You guys have a great Christmas, and I will see you guys. See ya.